Hello guys, good afternoon. Today is Wednesday, September 21st. I'm gonna be doing a little bit of an analysis on today's price action, and yeah, that's really pretty much it. Let me delete stuff that I'm not interested on. Is that fine? Yeah. Okay. And let's take off executions, which there's only one. Let's take off this. All right. So we had an interesting session where we could have taken one loss, one win, could have gotten out the day with a 4% profit or 4R, right? Depending on your risk. And there are a couple of things that I want to go through, and we'll begin with what was the direction for the day, right? What was the buys for the day, and how could we determine that? Let me go to the 1 hour, not the 2. Basically, the 1 hour, what have we had recently? We had this move higher, which, if I remember correctly, and we put the FIBO down here all the way up to this, it's wrong. So it's wrong. So let me actually reverse it. It's the same, basically. But as you can see, it does mitigate the 61.8, right? Also goes above the 50%, which is basically our point where premium and discount changes, right? So price goes all the way up to a premium price. Mitigates something in here, maybe the range itself had an order block, something like that, that causes price to start dropping. And I was going to say something else. And well, we went above Friday's high, which, if I remember correctly, was the high of the week. Yeah, so it went above previous week's high and mitigated a premium price along with, again, something in here like an order block maybe. But I'm not gonna get into detail with that. So basically went all the way up there, little bit of a reaction, retraces, aggressively drops. I think these were news, yeah, news. And then we have like a tiny bit of a range on where sell side. Oh, sorry, this is last week's price action, my bad. So we have this little bit of a range created last week, if I remember correctly. Yes, have run lower, run higher, a little bit of a range reaction, comes back down to order block, goes higher, more sell side liquidity, buy side liquidity taken, a little bit of a range, aggression lower, breaks the low, retracement, fair value gap, continuation, range, continuation, range, continuation. So being at this point where we had an impulse through midnight and well London as well, why could have we expected price to continue to go lower? I think it's pretty obvious, right? Because at that time we've set already somewhat of a trend. What I didn't like about this bearish trend is that, as an example, price didn't get up to something in premium, right? Didn't get to the 50, didn't get to anything close if we look at it from here. And maybe depending on how we want to use the Fibonacci, because ICT has different ways, not even this way would have been fine. So you can see it doesn't mitigate it by a few ticks or pips probably. But yeah, just nothing for us to use in this case. So why could have we expected the reverse trend? Again, we have price going above liquidity, reacting aggressively, impulse lower, retracement, a little bit of range consolidation, aggression lower. Could have we expected this to be just a retracement? Definitely. Could have we expected this to be a how do I call it, a reversal? We could have definitely called that as well, because not a reversal per se, but somewhat of a retracement. We could have said so because we have this low, we have all of these lows and everything, so we can understand why they could have been a buy, right? So I do have to remember that and basically keep it in mind, right? So let's get straight on to the today's price action, basically. And let me move all of these a bit lower. So, as you can see, actually, through midnight, something that I didn't see this morning, you see how there's like this couple of equal highs, like a lot of reactions around these levels, right? This being the highest point and maybe the lowest point, we could call it to be this. See how price just reacts once, not once, a couple of times around the same levels, basically creating a lot of buys at liquidity. Price aggressively takes and then immediately drops. Not sure if we had news through that time, don't really care, honestly. The thing is that we see a lot of aggression that, as an example, does generate order blocks such as this one and the one above, but the one above, as an example, was already mitigated by the time that we enter the markets. What else do we have? If we measure the move, we are inside a pretty premium price. Let me not reverse this. Okay, so you can see we have 61.8, so basically already at premium price, pretty high up. So if we want to sell, we are always going to try and sell on a premium, and price here through New York gets to that, takes some buy side liquidity. There's not much, to be fully honest. We have this high, and that's really pretty much it. And then, as you can see, we don't really have much of an aggressive move until this, which also has the market shift. In my opinion, this is the market shift in the 5 minute, otherwise it would have ended this low. And as you can see, the fair value gap that causes that market shift does get mitigated and also respected through basically the entire day, right, up until this point. So we have price just continuing lower. Phase 1 begins, continues with that trend, right? And the reason why I wanted to buy, or we could have bought today, is because of this. We have a couple of mitigations here, a couple of equal lows here to the left, right? Price comes here, respects that once again. When price just respects a level, just like that, just causes a little bit of a reaction, tends to be, from my point of view, just a little bit of a manipulation to trigger more entries around the levels, right? And as you can see, price then just aggressively takes below that, and then we get this, the New York open at 830, right, at this level, and price immediately starts going higher. What is it that I look for? Run and stops. Oh, actually, I have it right here. Run and stops, 5 minute, 50-minute displacement, and market shift, and then the lower time frame to give us the exact same thing, basically a lower time frame entry. And here, in my opinion, this is the market shift, right? The high. There's a fair value gap in here, waited for price to trade into it, and this is what we get. Sorry. This is the mitigation that we get. And if we go down to the 1 minute, you'll see why I bought today. Right here, price mitigates that. A little bit of a weak reaction, aggressive move higher. Takes buy side, of course, took sell side from this point as well. Market shift, comes back down. This was my entry around, well, below this low, basically around 123, if I remember correctly. Yeah, probably. Goes a bit lower. Stop loss, of course, was down to this low. Targeting what? London's high. London's high? No, not London. London is really far away. Pre-New York's high, and then we would see if we close the entire position there or not. What does price do? Goes aggressively higher above this highs, equal highs we could say. Price takes all of that buy side liquidity and then aggressively goes lower. Market shift in the 1 minute, fair value gap in the 1 minute. This could have been a sell that would have worked, although it probably would have closed. Not would have closed, but would have been taken out on break even on this retracement here. Because, well, price has moved a lot from my point of an entry. How much would have that been? Would have moved 2.65 are in my favor. I don't know. Would have been. Oh, we had news. We had news at 10. So yeah, definitely either a break even or closing before the news. But basically that, right? Basically that. So why could have we bought? We had a pretty nice drop. We could have seen somewhat of a retracement, maybe about this high, not necessarily all the way up to that, but we had multiple highs such as this one, this one, this one, and then finally that one, right? I did say through Telegram that I was thinking that this could be a Judas swing, right? A move against the trend. And when this happened, is when I said we could be looking for buys, for sells. But my problem with the sells were that, as you can see, we do have a fair value gap in the 5 minute, which does give us an entry, which we'll discuss in a minute. But my problem with this was the fact that there's no market shift when going lower. The market shift finally occurs when breaking this low, which also generates a fair value gap. And that's the profitable entry of the day that we'll discuss again in just a minute. So could have we bought? Definitely. We have the 5 things that we look for. The lower time frame entries looked good and everything. We also had that tiny bit of a sell side liquidity below those lows. So in my opinion, a really good entry that just failed. And it is what it is, right? There's nothing for us to do. How could have we avoided that loss? I think it's pretty obvious, right? We can understand that this is easily a Judas swing, a move against the trend, just seeking for some buy side liquidity to then just continue going lower. Because of this trend, again, right? If we zoom out, we can see impulse, correction, impulse, retracement, impulse, correction, impulse, correction, retracement, impulse, potential correction, potential retracement, maybe going up to this high. We never know when a retracement is going to end. What we do know is that if the trend is going to be respected, the next point to take is the lower low, looking for that lower low. So could have we bought? In my opinion, we could have, right? In my opinion, we could have, and still could have avoided that loss, as it is a clear Judah swing, potentially clear Judah swing, but of course we could have taken advantage of both. Now, again, as an example, for me, the sell that happened on this 5-minute fair value gap, even though it doesn't market shift, we could have tried to take advantage of this, but I would have not, honestly. And this is the first reaction, right? This is the first reaction. Aggressive move lower. This is the first entry that I saw, and I thought this could be an entry. But I decided to ignore for two reasons. It has equal highs, and the fact that, of course, we hadn't had the market shift on the 5-minute either. So there's no way for me to take that entry if I am going to respect my trading plan or my execution plan, right? What happens later? Aggressive move up. Takes buy side liquidity, right? Quite clearly. Aggressive move lower, market shift. So we have the run on, hold on. Why can I not? Okay. So we have the run on stops, the 5-minute displacement without the market shift. Lower time frame mitigates the area. This could have been the first entry, which again could have been a loss if we decided to take that. I didn't like it at all. And then we see basically a run above this highs. Aggression lower, market shift. So that's another point of what we look for, right? Displace and market shift. Fair value gap, this would have been the execution. And again, this likely, very likely, definitely would have ended in a break even, right? Because again, I'm selling from this point and price retrace back up onto my point of execution, right? And also it's happening with news, so I'm definitely not interested in participating on that. And either in some profits, closing 5 minutes before would have been 55. So here, when this candle closes, it's on the open of this one, could have been a what's 1.26. So definitely something before break even. Of course, it's something, but again, really not worth it in my opinion. So what we get later is this 5-minute fair value gap, right? We see the aggression on the move, creates a 5-minute fair value gap, and that's where I look for my entry. To the entry, the thing that I did with this entry, as I've been doing lately, is that when I take a loss, so the thing that I've been doing with my entries lately is when I take a loss, the second trade of the day is going to be with half risk and just looking for the just to cover for that loss, right? So if I took a 1% loss and now I'm risking a 0.5%, I'm gonna be looking for a 2R trade, just closing at profits and being happy with it, right? That's as simple as it is. Based on risk management by ICT, he taught it on card concepts. Don't really remember when, if I can be honest, but yeah. So 5-minute fair value gap, why could we sold from here? You can pause, find the entry, see why I could have sold if you want to, but I'm just gonna do the analysis. So buy side liquidity taken, along with the news. Aggressive move lower, breaks every single structure there is to break to continue lower. Little bit of a retracement. We could have, I think I did take a paper trading. No, I didn't. I didn't take a paper trading. I was thinking about taking a paper trading on this order block here with the stop loss all the way up there. Would have worked out, definitely. But what I waited for was price going higher, took some buy side liquidity, aggression lower, fair value gap. Market shift, fair value gap on this right here. And price goes through it, ranges a bit, and then aggressively starts going lower. And around here, I got the 2R. And do keep in mind that my entry was 69, right there. And stop loss was 112. And that's pretty much it. Closed to 2 point, not 2, just 2R. 2? 2 point something. That's exactly where it closed. As you can see, just covered for the loss. Pretty good day. Ended up on a break even. And basically what I managed with this was to, instead of getting out with a loss, it was getting out on a break even. But of course, as you can see, the trade did work out for quite a good time and could have gone even further, seeking for 10R, which is right here. There's a target. We'll show you that later. But safe between quotes. If we're expecting the trend to just continue to be respected, this would have been our target, as we're expecting that lower low in the higher time frame to work out. And as you can see, that's 5.21R, which means that if I would have continued to risk the 1%, or maybe even with the 0.5%, we're looking at a 2.5%, which means that I'm up by a 1.5 for the day, or a 5% on the 1% risk, which leaves me at 4% profit for the day, right? Really good trade, right? We have everything that we look for. And why do I say that? If we look at the 5 minute again. This is what we have on the 5 minute. Pull this up. Run on stops, we have that. 5 minute displacement on market shift, 5 minute displacement and market shift. Lower time frame trades inside the fair value gap, lower time frame displaces and market shift, which in my opinion, which I think it's on this move lower. And then execution, the lower time frame fair value gap, right? Exactly what we had on the other one. It's just that in this case, this sell was in favor of what we are expecting, right? If I'm expecting a bearish week, then I could just filter out every single buy that we have every single day and just go for the sells. If I was to do that, I would have missed out on this loss and I would have taken this pretty good profit, right? Instead of just ending the day on a break even, we would have ended that on a profit, right? Overall, a 4% profit. So yeah, definitely. On the other hand, no, I think that's pretty much it. Yeah, that's pretty much it. That's why we could have bought. That's why we could have sold. Again, even though this trade worked out and the lower time frame looks gorgeous, honestly, this is not a trade that I can take. There's no market shift. There's no structure for me to count as a market shift, unless, of course, we went to something like the 1 minute, which has the market shift on the breaking of this tiny bit of a low, and even generates that first entry. Also creates the 5 minute fair value gap. But that's not the way that I trade, so it's fine. And yeah, that's pretty much it. Target that I was talking about is the daily lower low. If we're expecting that to be taken, we're really not far from it. And that's what would have been the 10-hour trade, the lid of the trade, so I'm not going to redraw it. Then that is pretty much it. Really good day in my opinion. Both the trades had the confluences that I looked for, so I'm happy that I took both of them. Would have been happier if I took the second one with the usual risk and gone for the 5-hour that I should have gone for, but happy to end the day in a break-even instead of a loss, and just giving that risk management as usual. So that's pretty much it for me. I'll be talking to you until the next one.